Hey, what's going on, guys? Jacob Bill, CEO of Build Enterprises. And today on Wealth Wednesday, we're going to cover some dividend paying stocks that pay their dividends monthly, as well as another dividend investing strategy that's called dividend staggering. Stay tuned. This will help build your portfolio. All right, and welcome back. So today we're going to be going over some of the best dividend stocks to buy for 2019. Now, these are monthly paying dividend stocks. And so if you are looking at, if you're, getting either a little bit older and you're looking to supplement retirement income, or if you're looking for not really an explosive growth opportunity, but something that will pay you, just based on your financial needs, that will pay you monthly instead of like for me personally, I like quarterly dividend paying stocks because most of the blue chip companies are typically companies that are so well established that they're pretty much too big to fail type of philosophy. But if you're looking at needing that money to come in monthly, there are opportunities. A lot of people aren't really familiar with monthly paying dividend stocks, so this can definitely help increase your monthly revenue coming in, but they are structured a little bit differently. So this article is from The Street. I'm a big supporter of The Street. I do a lot of my research, especially for stock opportunities and decent buys and just kind of market trends from The Street. So now with monthly paying dividend stocks, there are a lot of options like REITs, real estate investment trusts, and other types of ETFs, electronically traded funds, that kind of wrapped up in a monthly paying dividend. Now, monthly paying dividend stocks, they're not explosive companies like I mentioned earlier. So when a company pays a dividend out, that means that the company, instead of using those retained earnings to grow, increase marketing, increase staff, increase R&D, stuff like that, the majority of the retained earnings, again, this does change from business to business, but there's a portion of that money that's not being put into the growth of the company. It's putting in to reward the investor for having their money and rewarding them for their time. And typically, I will see monthly paying dividend stocks to pay a little bit less of an annual yield than quarterly stocks, just because of how they're designed. Now, a lot of people that will get caught up in a monthly paying dividend stock, and I'll kind of explain a strategy that I use to still get monthly income, but be invested in stocks that are paying quarterly. But I'll get back there, or I'll get to that here in just a second. So one of the first things is Vanguard. Vanguard for the FTF, stock ticker BND. They're at 2.75% dividend yield. They have been recognized as being one of the top best paying monthly dividend stocks here in 2019. AG&C Investment Corp, they're also looking at being one of the bigger dividend yields. Now, if you look at for AG&C currently right now, and this is against really what monthly paying dividend stocks will typically do. This has a huge dividend yield right now. Now, and some people go, well, that could be temporary, which is very true, because when a dividend stock is going to pay a dividend, and when that dividend is paid out, they will do a dividend declaration for their next payment period. So they have to declare to you if they're going to pay a dividend, either the same or different, when they do the declaration of dividend. So you, as a trader, if you are really focused on just being a dividend stock, if the company, like for example Ford, when they're going through the hard times, and I'm a big Ford investor, and they are a quarterly dividend paying stock, and also blue chip, but they did not pay a dividend for a period of time because they needed to keep the company afloat during the big financial crisis in the automotive industry. So a company is not, they're not required to pay a dividend to you, but they must notify you if they're not going to pay a dividend. So that's definitely something to pay attention. And your broker or whatever trading agency that you use should send the declaration to you. If not, go to the company's website, pull up their financials. They should have their announcements there because they are required to announce that to the stockholders. G&L, Global Net Lease Incorporated, is also a monthly paying stock. Now, they are a small cap. So a small cap stock is a stock that is trading under a certain market value. And so the nice thing about small caps is that they do have and they are very likely to see good amount of growth if the market is conducive to a small cap company. That means the company is just a smaller company and has a smaller market cap. That's what a small cap means. So as of right now, they're offering a 10.71% dividend yield. Now, these dividend yields, again, are yearly. You're not going to be getting these kind of returns every month. So make sure an annual dividend yield is going to be a yearly. So take this 10.71% and divide that by 12, and that will be your yield. So don't get confused that you're going to be getting a 10% return on this stock, because that is an outrageous return. The only kinds of returns you're going to see like that is if you get into like the ground floor of a growth company or a startup. Crypto was going nuts for a little bit. So if it sounds too good to be true, make sure you double check it and you make sure you understand it. Because, and again, with stocks, and also make sure the stocks are liquid, meaning that there is a good trading volume, because if you're going to sell a stock, there also needs to be a buyer. So you want to make sure that your positions stay liquid if you are kind of iffy about a company, or if you're just starting to trade. These are definitely things to consider. LTC Properties, they're also offering a good dividend yield right now at 4.8%. They are putting in some great income right now. So that's definitely something, because not only are you going to be getting the dividends, but if they're having a strong market right now and they're on an uptrend, they should be able to not only give you your dividends and continue giving your dividends, but also you have an equitable position in that company, meaning that if the company value grows, your shares in stock grow. So now not only are you getting a dividend yield, which is a return, which is a realized return, it's in your pocket, but then you can also earn your appreciating asset or your appreciating position with the company, and you're also making money there. Now, the increase of your equitable position, meaning the increase in the value of, let me rephrase that, the increase in the value of your equitable position, because you only get a more of an equitable position if you buy more stock. But the increase in value in your position, if that is increasing as well, that is a not realized return. That is a paper profit, meaning that until you sell that stock, that profit is not realized. However, your dividend returns, once they hit your bank account, which they will do every month, that is a realized return. That return cannot be taken from you. And it is not going to be reflective of the market trends at that time. So that's definitely what you want to focus on as well. So it's going to be kind of a balance in between. Number 5 is Main Street Capital Corp. They're at a 5.9% dividend yield right now. They posted a very profitable year. Realty Corp, they do specialize in commercial property and single tenant leasing. They're not truly an REIT, but I believe that they operate like an REIT, and they do have a 3.74% dividend yield, but they're having a strong year, and they have been on the uptrend as well. Shaw Communications, I believe that's SJR if I'm not mistaken. They're a Canadian telecommunications corporation, and they do have a 4.54% dividend yield, and they've been running into a little bit of economic headwinds when it comes to their growth as well. And again, I'll link this article in with this video so you guys can take a look, because this is one of the most recent releases from the street on monthly dividend paying stocks, and I wanted to send it out here on Wealth Wednesday because I do get a lot of questions about dividend stock. So this is something I thought that I could relay this information to you, because a lot of people just don't know there is monthly options as well. Gladstone Investment, they're a little over 7% dividend yield right now. So that is a pretty good. Again, if you just focus on the dividend yields and you don't focus on the increase in equity, or an increase in value with your equity position in the stock, you're kind of going in half cocked. Because again, I mean, the old adage is if you're hitting 10 to 12% returns, you are beating the market, and if you're beating the market, you're doing very well. So these stocks, you need to take into account that you're going to be netting that every year. You also need to take a look at, okay, well, where's this position going to go as well? Vanguard long-term bond, they're going to be a bond. They're going to be a bond mutual. And they say that that's been averaging about around 7% on the market per year, and that's also paying a 3.34%. So if you're looking at that, that is a over 10% return stock. Again, you have your equitable position, and then you have your dividends that's coming in as well. So that is a at close or beating the market, which is 10% every year is a pretty good yield. The Wisdom Tree U.S. High Dividend Fund. This is another fund, dividend yield of 3.5%. And then again, looking at what your position is. And these are all kind of more to the ETFs and more into the funds here as we're finishing up this list. We do have Invesco. Invesco's over 4%. And then you got your Invesco preferred ETF or the PGX. And again, most of that is residing in the corporate sector. And then there's also a large preferred share. And preferred share will be a topic we'll get into at a later time. So that's kind of the demographics of that stock, and they are doing over a 5% dividend yield. AAM, S&P 500 high dividend. They are sitting currently right now at a little over 4% or 4.5%. And then the ProShares S&P 500, they're also another ETF, and they're at an annual dividend yield at 2%. However, with that yield, you're going to be looking at a lower risk position. And so, and just to kind of finish this off, because we have broke the 10-minute mark on this video, there is a strategy that's called dividend staggering or dividend stacking. I know it's very common or very similar like bond stacking or staggering. So if you're like me and you are a big advocate on blue chip dividend stocks, which I am, there's a pretty good risk to reward ratio there. And they're most likely nothing's going to happen to them. They're not going to have the explosive growth as some of these smaller caps, but they're also very, very stable. And so if you have dividend stocks that are paying quarterly, you can also invest money into other blue chip dividend stocks that are paying quarterly as well, but it pays at different months. So say this one will pay in January and its next payout won't be for another 3 months because it's quarterly. Well, I can invest in the company B that's a blue chip that pays February and then every 3 months after. And so I'm still making a monthly return on these, and it may be a little bit less risk than some of these smaller caps or some of these other ones that might not have the financials that I'm looking for, may not have the stability or the low risk that I'm looking for. And so these are things that you should really, really consider if you are going into these types of stock. Again, I will go ahead and link this article into the description, and then there will be another, more than likely next week. I will truly focus on dividend stacking or dividend staggering. And so you can kind of see what the power is on that. And that might be a better option for some people that are less risk tolerant, or want to go with more established companies that they've known for a long time that pay dividends out, such as Ford Motor Company. That's a very common one, and a lot of dividend investors do like Ford. It is a tremendous, in my opinion, it's a tremendous blue chip and dividend paying. They haven't been performing all that well this year, but again, that dividend is a very good dividend in the market. So anyways, thank you for joining me for Wealth Wednesday. I hope that this is something that you guys can kind of mill over. This is something that will generate you more money. This will generate you more money per month if you have the capital to invest into some of these stocks and it will start bringing in a revenue stream to help you out. Plus, you can have a good equity position that can appreciate over time. So again, thanks for stopping by. I will see you in the next video.